All right, lecture 19, and ICT went live in the PM session. So I did a tape reading session for the AM session. It went pretty well. So check that out if you want to. I'll probably rewatch it again just to see the price action because price action has been so good recently. Amazing and wonderful to see. Here are my notes. Kind of just went over. I tied this into purge and revert. He's talking about previous day high, previous day low. I'm now am going to be marking those because I have noticed that there are some nice setups, and ICT just posted a setup this morning that happened with the previous day high, which is very nice to see. So, previous day high, previous day low. So, going to be paying more attention to those, targeting them as well. He went over where to possibly troll your stop. He went over implied dealing range, accumulation, narrative, breakaway gaps. First presentation went over that again. Overall, just kind of similar stuff. Um, Same stuff every single day. It's repeating logic. You kind of went over that. It doesn't matter when you watch these lectures because it's the repeating logic. It's the same logic. You don't have a disadvantage by watching it later on in the future, and it sure is going to be kind of the same uh, type of lectures probably going forward. Same logic. What are we looking for? Jagged edge, looking for smart money to trade away from that. I do want to go over the price action. I do have some annotations here. This is just a very soft markup, and then I actually do want to drop down in trading view. So this is like very minimalistic here. So I would say like if I could have the least amount of annotations on my chart, this is what it would be. We have opening range gap. We come up. We have smooth edges here. We make them jagged. Some money accumulates shorts above midnight open. Then we're above midnight open. We're above new day opening gap. We're entering a premium. We enter a premium market to then distribute to a discount market. So smart money's accumulated within a premium and distributing their orders here. We have a 1-2-3 drive. This right here, this green box is a opening range gap that didn't get delivered. It's also a breakaway gap. So I have that denoted on my chart. So this still needs sell side delivery. This gets sell side delivery. We have a 1-2-3 drive. Sets us up for a intermediate term retracement. This consolidation, a bull flag. Oh, it's gonna go back. It's gonna reverse. We're just trading within this gap right here. Notice how we're expecting constantly approach to that. Then we break lower, and then we use this new day opening gap right there, and then boom, we distribute lower to previous day low. Since we've had a shallow rate on that low, or since we've had a previous day low, we're likely. Sorry, I don't know why that's popping up. We're likely going to have a more meaningful purge below that low. So that's what we see here. We see a more meaningful purge to where? New day opening gap. And that gets traded to beautifully. And here, we're just going to do the annotations. Here's Asia. Asia, very nice price action in my opinion. Like, I've been looking at Asia. And, okay, so from 6 to 7, what are we doing? We're creating this implied, or we're creating and we're forming the dealing range here. So we create a dealing range, and now we're in a discount market to this new day opening gap. This is fair value, and it's very pleasing to see price go back up into there. What do we have? Low, 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 low. Low resistance liquidity signature. We're coming up. We're trading into this sell side imbalance. Boom. Right here. Low resistance. That's a nice model. We don't actually turn into this gap. Balanced price range. We don't need to. So then we trade lower, and then we create here. This is a balanced price range right there. I believe it might be on like the I think this is a gap that I'm just not able to see. But balance price range here, we drop into this, we trade into a new day opening gap, then we leave a breakaway gap, is what we want to see. So our money is accumulating every low. Boom, we're accumulating that, and then if we look at the gaps, we have a gap here that gets traded to. This is happening outside of Asia session, so we don't really get speed because this was speedy. This move was speedy, so therefore the right side of the curve is likely going to be a little bit slower. It's going to take a little bit more time to trade into this high, especially if it's Asia. We're likely not going to have too much volatility. And as we see, we're trading into new week opening gap, new day opening gap. That's that magnet. That's that magnet on price. New day opening gap, and then initial buy side as well. So very nice to see this. Notice how price is respecting this new day opening gap right there, and we'll go over that. And London, I believe I had a London annotation. No, I didn't. I definitely have an image somewhere that I don't think it made it into this. But anyways, here we're respecting that. We're trading higher. We're trading back into this, using that again. We have an SMT here and then SMT here. So double SMT, whatever you want to call it, during a macro here, we trade back lower into Where's that new week opening gap? Notice how we're enticing traders here. Oh, they might trail their stop up here. Then we're trading lower, new week opening gap, and then we see this move. Balanced price range forms. This gets respected, and then we seek higher prices. So right here, I don't know why that's pulling up. But right here, pre-session, I was actually watching this live, and I was looking to see lower prices. I actually did take an entry, like a little $20 loss on a demo account, which is cool. This is what I'm here for. What I need to work on and what I'm trying to get better on is waiting for the stop hunt to occur. Then once the stop hunt occurs, then that's when the move is gonna happen. So right here, this is just time distortion. This kind of accumulation. We get a double purge. We get a false breakout here, then come up to take these highs, to then see a lower, to then see this real move. Notice how here we have market structure shift. We're failing to reach previous day high. Volume imbalance is getting respected. We're seeing lower prices. This accumulation. Boom. Breakout traders enticed. Breakout traders enticed. And now we form a balanced price range. So where are we more likely to trade to? Trade lower. New day opening gap and that cluster of fair value that's right here within that new week opening gap and new day opening gap. Notice here we have this imbalance right here, and we trade up into this imbalance. Also this order block. So we trade up here, we return to fair value, we return to this candle right there, and then boom, we get displacement right there. Volume balance gets colored outside of the line. We're trading to a CIVI, and then we have a rejection block right here, and that gets traded to right there. We're failing to reach this inversion fair value gap, and again, we have a balanced price range. Price has been delivered buy side here, sell side here. We don't really need to trade back up within that. So that was kind of that pre-session, and is this the lower half of that? No, I don't believe so. I believe there's more I'm missing out. So I'm not showing everything, but here we have pre-session. This is a 15-second chart. Yeah, this is a 15-second chart. As you see, look, volume imbalances get respected up to buy side. We're taking sell side and we're leaving smooth edges there. So that's right there. And then we also have this reclaimed CIVI with that new day opening gap, new week opening gap that we're respecting up to buy side. Those levels, like, they're there, and they will always be there. And here we have. Oh, I kind of want to hop into the actual charts here now. Yeah, let's hop into the actual charts and let's go over this because there is a lot here and there a lot that's very nice to see. Oh yeah, and was this the day? No, ICT did not take a trade this. He took the trade yesterday or the day before this. So here we have volume imbalance. We're trading back up into there. Boom. And we're trading lower. We get a run higher, generating more highs. Then we're trading lower. Sell side taken. No sell side gets taken here. We have smooth highs. They're trading right here. Look at the bodies. Look at the bodies. Going a little bit outside of that. That's okay. That's permissible. Then we see a 1 minute change of steady delivery. We're trading back lower into that volume balance displacement, reclaimed fair value gap, and then we see buy side take. So right now we have opening range gap. We're delivering to that in the 9:30, right at 9:30. Right at this point, I'm looking at that we have previous day high that we failed to reach to. So we do have liquidity that rests above here. But if we're looking at this, we are taking these highs. So we take these highs, we then create this, we close below this, creating a balanced price range. Price doesn't really need to trade back up here. With then what else do we have? We have first presentation right here, the first fair value gap between 9:30 to 10 that we trade into right there. We also have these wicks right here that form a balanced price range, and we have this inversion fair value gap with that opening range. So we have all these things converging right here to then get a nice trade lower. I actually did take a trade here during the tape reading session. I know it's a tape reading session, but I was actually demo trading. And the reason why I'm demo trading is I'm just trying to get my getting comfortable with being in fluctuations with price, and that's kind of just the main deal. Like, I do not care if I take a win. I don't care if I take a loss. I care that I show up, I journal, and I get better, and I'm just getting comfortable and getting used to being in these fluctuations, which is what I really care for, what I'm really striving for. And like, I could care less about what the result is, and I don't want it to be a point to where, oh, I took a win today, or oh, I feel good about this. I feel enlightened because I took a win. I don't want to feel that. I don't want to get my ego in the way, which is why I kind of want to do this in demo for a while before I even think about doing live funds. So here we have this buy side taken, balanced price range. Then we trade lower. We'll go into that in the lower time frames. We then would have immediate rebalance. We're failing to create a gap. Okay, and here is where price action got a little bit. It got a little bit muddy here. So as you see, we have a 1, 2, 3 drive here. We're trading into that portion that needs sell side delivery. We're delivering sell side. Okay, look at these wicks. We're failing to really go lower. So this is priming us up for a possible intermediate term retracement. And now what do we have here? This is a rejection block. This is actually taught in some of the private commentaries. I believe it's 2021. I'm pretty sure he talks about the rejection block before the stop hunt. I definitely need to rewatch some of those because those kind of happened a little while ago. So I definitely know more, so I'm going to retain more. And I didn't really take it that seriously when I was watching them. I was kind of just binge watching them, to be honest. But here we have this rejection block that gets claimed right there before the stop hunt. And we also have this down close candle. And I also do want to drop into that in the lower time frame. I did look to take a trade here on the 15-second, and I got stopped. And then we're trailing up to the AM session buy stops. We have this gap right here. So this is a breakaway gap. Breakaway gaps are good draws on liquidity. So we trade up into that. And we also have this portion that I wanted to see get filled. That was on the 5-second. That was a volume imbalance. But the fact that we're failing to get up into that is insight. And we're failing to get up into that. So now this is then when we get inversion fair value gap gets traded through. We get a market structure shift. We are leaving equal highs, so we don't really have a jagged edge. But we are trading lower, we are displacing, we do have a balanced price range. So therefore, price doesn't really need to trade up here. We're leaving this portion unfilled. That's what we'd like to see. That's very nice. So what do we have here? Displacement, inversion for value gap, institutional order flow entry drill on the lower time frame. And then we're trading lower. New day opening gap right here. The low end of that with a immediate rebalance right there. Boom. That in itself is a pretty nice entry model right there. Then immediate rebalance. Notice how we're not forming a gap. We're not forming a gap at all. We have concentration of this wick. Once we close below that, this now is a breakaway gap. We don't really need to trade back up into that. We create a balanced price range. We're respecting that. We have this up close candle that we're respecting. Look at the bodies. We're respecting mean threshold of that. I actually do want to get that measurement. Okay, pretty close. But what if we do the whole candle? They'll definitely be respecting that. Okay, that gets respected. We then trade lower, and then this is the previous day low. Okay, since this is a daily busy, this is a daily fair value gap that we're within. We had a very small purge. I'm not showing it on this chart. We had a very small purge into that, and we are trading into previous day low. So therefore, I was kind of trusting this, and I did think that we could trade a little bit lower, and that's what we end up getting. We end up getting another drive lower. In my little tape read, I didn't have any partials, so I wanted to kind of secure below the previous day low. Had I had partials, this would have been a nice exercise. Price runs another 80 points, which I don't care to get every last tick of a move. But it's something to look for and strive for, because if we know that we're on side, why not try to squeeze and try to get better at your exits? So right here, ICT went over the trailing stop. Watch this lecture for that. Then we get trailing buy stop right there. So that could have been your exit. Then what do we have here? 11:30 starts the lunch macro. Okay, who has made money? Shorts. So here we get a leg higher. We're generating sell side liquidity here, and then we get a sell model here. Take this low. I believe we create relative equal lows right there. Yeah, we create relative equal lows. And then we have an inversion fair value gap. We trade above that. This is an order block right there. Boom. AM session buy stops get traded to. ICT went over the fact that how we're accumulating above this high right here. This is a false bull flag. That's how we are able to tell. If they're happening above old highs, that's when we're likely going to have a false bull flag. So right here, bull flag, and then we trade lower. We get displacement lower. We get a market structure shift here, and then we get a more significant market structure shift or break right here. So we're trading lower, and look at what we're doing. We're trading into this Tuesday the low right there. We're trading that low, but that's getting respected. We're almost coming up, and we're almost delivering right to that. Then we see another leg lower, institutional or full entry drill. Breakaway gap forms. This is a balanced price range. Buy side and sell side are offered within here. Notice how we have lower highs, continuous lower highs. That's heavy price action. And then we see a breakaway gap here, balanced price range on the lower time frame, and then we're at implied dealing range. We're trading below 50% of that. Once we close below that, we're likely gonna have speed, and that's what we end up having here. Nice speedy delivery right there. Boom, that gets straight to. We leave a breakaway gap. What is a breakaway gap? A likely influential draw on liquidity. We then trade lower. I do want to know where was this low. I believe was that a new week opening gap? Perfect. Old new week opening gap. Perfect delivery to that. Then trade above. As you saw previously, or I flashed, there was a new day opening gap. Boom, change state delivery here, right within the 250 macro spools. We stopped dead in this track before SIBI. We're accumulating before that. And boom, we see displacement. We see an order block it gets traded to on the 15-second. And then that previous day low is targeted. It is the draw liquidity. And like that's largely influential. So I'm going to start having those on my chart, start denoting that. Then what are we doing? We're consolidating. Buy side, buy side, buy side. Buy side, buy side, buy side, taken. NVIDIA did had earnings today. NVIDIA had earnings, so that's why this was all like that. So buy side, buy side, buy side taken. 350 macro opens up. We get volatility injection here. Buy side taken once more, and then we get a lower time frame model right there. Very nice to see this. Very nice to see this, and very nice to see it pan out. Notice how here there's not displacement here. So why is this not a market structure shift right there? Well, we don't really have any displacement here. Now we have displacement, so now we trade to sell side. We have equal lows right there. It gets tagged. We're trading back up into this SIBI during earnings. Notice how this even earnings is algorithmic. We trade up into here. This upper portion's being respected. We have a volume balance that gets respected, so that right there could be an entry. Boom, and then we see this intraday low get targeted. So that's the business there. I do want to drop down to a 15-second, and I'm not going to go, I probably won't go into a 5-second chart. I think a 15-second chart is plenty, but yeah, I do just want to go over a few points, and then we'll see. Volume imbalance, boom, we're trading up to buy side, opening range gap, buy side here, sell side here. This is all sufficiently balanced here. We have a volume balance that's getting respected. That's keying off that we're likely in a sell model. Here we have this 823 low that we trade to right there. Then we trim up, and now we have a stop hunt. So where we have a stop hunt, we're trading at all that. We have a balanced price range. We have first presentation. We have all of these PDAs, all these convergences, and this is actually when I took an entry right here. Buy side offer right here, sell side offer here. Stop hunt here. The stop hunt has occurred, so now it is the right time. Here we have this right here. We trade up into that. Also with this down close candle right there. Boom, that gets respected. Look at these imbalances. And then here we have that 1, 2, 3 drive. Nothing crazy here. Then we have this bounce price range. So what I did want to note is I took a long hair off this, and I put my stop at constant encroachment of the 1 minute wick, and I ended up getting stopped out. But I'm not gonna go to the chart here, but this, you gotta just trust me. But this right here, this is a 5-second wick. So we traded constant encroachment of that 5-second wick. So I had the right idea to put stop at constant encroachment of that wick, which I'm not mad about, which I don't care about, which I'm cool with. I'm cool with that. But the algorithm keyed off of that 5-second chart, which was very nice to see, very pleasing to see us trade to that constant encroachment of the 5-second wick. So I am gonna note this going forward, that the algorithm keyed off of the lower time frame wick. So if we have a wick, I'm gonna start looking for on the higher time frame. I'm gonna start looking for the lowest time frame possible to see if the algorithm is gonna refer to that. So that's just kind of something to look at going forward. And now we're keying off of the rejection block, so it's very nice to see what the algorithm was actually respecting after the fact, which is always nice to see after the fact what actually happened, because there's only so much you can do during live price action. And this is what I'm saying, like after just seeing market maker models occur over and over, this right here, we have sell side of the curve. Wow, that looks bad. We have sell side of the curve and we have buy side of the curve. This right here is a little bit aggressive of an entry. Like, yeah, we have displacement. Yeah, we have a fair value gap. But I mean, I guess this is hindsight. But we're likely not gonna have just boom, boom. Like that's a pretty aggressive move to try to get. Notice how we're spending a little bit more time. We're spending a little bit. We're generating orders within this time, and we're coming back down in constant pressure that wick. So uh, this entry was kind of asking for a very speedy delivery to this high here. We come back down to this low, and then we kind of deliver like that. So, and we also didn't have a stop on here, so that's also what we were looking for. Stop on right there. And then here's the business. We have institutional order flow entry drill. Um, I would recommend watching the tape reading session, even if you just skip through it. It was a good session. Here we have institutional order flow entry drill right there, rejection block right there, trading lower, inversion level right there, boom, sell side imbalance right there. All this is getting respected, sell side imbalance. These are happening during the immediate rebalances on the 1 minute. Sell side imbalance again. Here's a 5 second sell side imbalance right there. Also this right there. Notice the bodies are being respected. Breakaway gap, institutional flow entry drill. Fair value gaps in, fair value gaps out. We're trading lower. Buy stops taken there, and then we're trading lower throughout there. We're trading. This is the balance price range on the 15 second. We're respecting that volume imbalance. That's algorithmic signature. Then what do we have here? We're failing to reach that high right there. Then we have a break here. Volume balance. This is beautiful. This is beautiful. So this could be a possible model. This is 2022 model. Buy side taking shift to market structure. Here we have a sell side imbalance. So this is what I kind of want to get better at, and I kind of want to like. I guess if you're too picky, there's gonna be trades that leave without you and run without you. But instead of entering here on this imbalance right here, where can we trade up to? This volume imbalance right here. So this could be if I'm trading larger size or more than one contract, which I'm not going to practice right now because I won't be trading that in a live account. This right here could be a one contract to trade here, and then we could have another one trade here, or maybe you have both your contracts at rest here. So kind of just get into with seeing that, and then look at the bodies, respect that imbalance right there. We're trading back to this low. Sell side taking balance price range. Don't really need to go over too much of that. We have a breaker right here, getting respected, upper portion, and we have this imbalance right there. So very nice delivery right there. Institutional order flow entry drill right there. What is this? Volume balance. I said what is this to stall because I forgot what I was trying to say. Then we have this sell side imbalance. That's getting respected. Sell side imbalance. Honestly, not too much volume balance, immediate rebalance on the 1 minute. And then here's that 15-second order block. We're trading into this volume balance. We're trading to internal range liquidity. That's very nice to see. We're stopping dead as track right before that, accumulating above that. Buy side imbalance. Order block traded to. Right here. Previous day low is targeted. Very nice to see that. Then we have this. Boom. We're trading lower. Buy side. And here's institutional order flow entry drill here on the 15-second stop hunt. We're expecting constant crunch for this wick with the bodies, so that's a signature to look for. Look at the bodies, respecting that. Very nice. Boom. And then like this is just beautiful. This is just beautiful. Sell side balance, like it doesn't get easier. Not easier because it's not easy, but it doesn't get. Technically trading is easy, but there's a lot of things to it. So I don't want to say that anything's easy in trading because really trading's not easy. If it was easy, everyone would be crazy. And the people that say it's easy, they're just on social media. So they're not real people, or they act like they're not real people. They act like they're invincible, but really they're carrying a lot of baggage. So that's why I don't love social media, because it cultivates that environment. Everyone. Even me myself included, like even me right now, I'm acting like I'm better than I am because I'm talking bad about other people, which definitely trying to stay away from with my mindset. But here we have buy side taken, and then boom. That is that is the day. That is the session. That is very nice price action. Anyways, I appreciate you guys. I'll see y'all on the next one. Hopefully, y'all have a good rest of your day. And I just want to say, ICT, if you're somehow watching this, thank you for your time. I doubt you are, but I appreciate you. And I'm going to continue to learn and take copious notes. So I'm currently working on my Obsidian. I'm trying to get all my notes. I'm redoing the 2022 mentorship, so I'm going over that again, and I want to have pretty much like all these notes from all the content written and have in my own. So that's currently what I'm working on. I don't know how long that it will take me. I assume probably a year. Especially if because it's kind of it's harder now because of the 2024 mentorship, which I'm not complaining about, which is absolutely amazing. Because what I do is I watch these once, and then I watch them again, and then I have to take notes, and then just just also filming these videos, and then going annotations over price action. Like backtesting and journaling and logging takes time. Like it's not something that's easy. It's not something that's gonna take 5 minutes, 10 minutes. Like there are some days when like I'll postpone doing it, and that's what I cannot do is postpone going over the charts, backtesting, studying, journaling, and logging, because what I'll find myself doing sometimes is I'll be watching like some random videos. I'll be kind of not prioritizing going to the charts over everything. I think looking at the day that just happened and the day that just transpired in front of you is the most important thing to do over anything, because it's new, it's fresh, and in your subconscious you actually went through it, you actually did it. So that's what I'm gonna be focused on, is focused on price action first, and then going back if I have extra time. That's kind of how I manage my time. But I honestly I I don't know how I'd be able to do this if I had a job. Like I mean straight up. So I'm putting a lot of faith in myself. I trust myself, and I'm very excited to see where this takes me. What if? This is something great? So that's all I really want to say. I just want to talk about that real quick. Hopefully y'all have a good rest of your day, and I'll see you on the next one. Have a good one.